Hi, everyone. For those of you who haven't met me yet, my name's Emils. I'm representing the Latvian Business Angels Network, but I think it's all quite familiar faces here today, so welcome and thank you for taking part in today's event. I think you know the concept of our agenda quite fairly. As each time we have the event split up into two parts. The first one is that we have a guest coming in from Estonia, Tommi from Karma Ventures. Yes, applause, applause. We will be doing a quick, let's say, fireside discussion together, but you are free to pitch in with any questions if you feel so, because we understood that for a long time we haven't had, let's say, any VC investor on the stage here, so decided to bring in Tommi this time. But yes, and then the second part, of course, we have 6 startups presenting here today, 3 from Latvia, 2 Lithuanians, and 1 Estonian. So a full Baltic scope of them. But yes, before we get into the official part, I have a few announcements to also provide to you. The first being is that we have now, let's say, in a more concrete way, strengthened our collaboration with the Finnish angel investment network. They are the largest network in Europe, I think close to 700 angel investors. And the partnership is very straightforward. LatBAN members can participate in their syndicates and their members can participate in our hosted syndicates as well. So if anyone is interested in taking part in, let's say, at least in their discussions of syndicates and what is actually happening over there, you're more than free to do so. I will be publishing what is happening on their side quite frequently because they have quite a lot of investments going on at the same time. But either way, I think it's just very positive news and outlook, at least also for us, that they're also interested in hearing on what is going on in Latvia and the Baltics itself. So yeah, that's maybe something quite interesting down the line. Yes, also, we have opened an investment opportunity into a company, Nordfen. It is a Swiss-based startup that is also opening an office in Riga as its European, let's say, headquarters. There are some great co-investors in that round as well, which is led by Bright Eye Ventures, which is a 100 million VC fund, along with Plug and Play and European Space Agency participating there as well. And there's just a small allocation for our investors as well. I think it was roughly 80,000 that is left to commit. And we have started collecting commitments, but if anyone is interested in learning more about this deal and getting the full scope of materials, you're free to message me anytime and I'll provide you all of the details. Yeah, that's that. Also, we're doing like this really small giveaway, I would say, to our community. So basically, starting September 22nd, we're running our angel training course, which is designed for new and established investors to kind of upskill their practices and learn from other great investors from our region. But yeah, essentially, if you know any person that would be interested in taking part in this course, you're more than welcome to refer them to us. And if it goes successfully, we are looking forward to giving away an investor ticket to the Startup Fair conference that is happening on middle of September in Vilnius. And yes, and also talking about the Startup Fair conference that is going on in Vilnius, we have also are collaborating with the Estonian and Lithuanian angel community, and hopefully we'll be selecting collectively one company from the competition where we will be putting up a syndicate close to 200,000 euros or even more if it's a cool company. But yes, essentially we have already pre-selected, or let's say pre-screened 10 companies from the whole, I think, close to 200 companies. If you're curious to, let's say, know who these 10 pre-screened companies are, you are more than welcome to scan the QR code, or I will just paste the link after the event in our WhatsApp chat and send it to you, Tommi. We will be happy to hear any thoughts and maybe some indications on where should we focus our attention to, and maybe someone wants to help out with due diligence as well. And also talking about our next events already, we'll be hosting like a very informal gathering for our members, friends, partners, founders, etc. on the 18th of September in a jazz club near the Värmanes Dars. Anyone is welcome to come in, grab a drink with us and spend, let's say, the after hours of a Friday in a, let's say, relaxed company with some, let's say, jazz music playing in the background. But yeah, I would say that's enough with the announcements. If anyone will have any questions, I'm happy to answer them afterwards. But now I would like to welcome on stage, on the seat, Tommi. And I guess we can slowly begin also the fireside chat. Yeah, you can take this. Yeah, maybe just to get this started and get this rolling, Tommi, maybe you want to do a better introduction about yourself than I did. I only said your word, your name.
All right, hi there. So I'm Tommi. I'm with Karma Ventures for the past 10 years. I've started my career in the early 90s, and since I'm Finnish, I started at Nokia. I was first working on like the chip and processor design there, and ended up kind of heading like most of the chipsets we developed for the mobile devices, as well as the kind of software for the category of products where Nokia was successful, so these feature phones. Then I moved to Switzerland to a company called ST Microelectronics, where I had the chance to like lead the mobile business of that company. And you know, the companies who used to be my competitors at Nokia, they became my customers, and my earlier suppliers became my competitors. So that was like a pretty good like vantage point for like international tech business. So I knew like at that time most of the other kind of smartphone makers and also like the semiconductor companies. Mostly I've used that information now to pick my investments in this AI area for personal investments of public companies. But after that, I was lucky enough to work with Index Ventures for a moment, like helping a few of their portfolio companies. And then I had an idea for a startup of my own, which was a company related to like making data roaming more accessible to people who travel. So it was this type of like downloadable eSIM product that you can use nowadays. We were one of the pioneers, and at that time we needed to have a device that had like multiple physical SIM cards before we were able to convince the operators that they gave us the right to kind of store that data just in a single SIM. So those were like the first two parts of my career. So first like bigger corporates like in the tech space, and then you know a few years as an entrepreneur, and then I was again like quite lucky that I met my current partners Markus and Christian, who were managing like the Skype founding engineers multifamily office and like startup investments. And the Skype founding engineer said that you know they'd rather kind of not build a new portfolio for next phase of startups, but they'd rather be a cornerstone investor in a venture fund. So we had like this cornerstone investor, and then Markus and Christian were looking to add like a third person to their team who had like slightly different background to them, and then this like global technology network that I had kind of seemed valuable, and I was able to join as partner for Karma, and we set up our first fund in 2016 that ended up being a 70 million euro fund, and then in 21 we did a second fund that's 100 million euros. We are still investing out of that one. So my venture experience is kind of relatively short, that it's 10 years compared to my 33 years of like working career to date, we've only had like a handful of exits like during this time. So the average European VC fund life cycle seems to be 15 years. So I still have a lot to learn here. So I've also made like a few angel investments in my time before I joined Karma, but they were like quite selected, so like a handful. So I have some experience from that. It's a great opportunity to be speaking with you today, and I took up the opportunity because I thought that it's always good to know the local angel network, because most of the companies we ever invest in at Karma have sometimes been invested by some of you earlier. So thank you for all that early work that makes our job possible.
Great, great introduction. But actually, just to kick off this, let's say, conversation, I mean, Carbon Ventures pretty much invests in deep tech software-based startups. I mean, you're coming up to this room with the lift. Maybe I know you were with someone in the lift, but let's say if you were together with another investor in the lift and you had to, let's say, pitch yourself on why investors should invest in deep tech instead of, let's say, the software or AI-based solutions that I know probably get traction much faster, the exit route is much faster. So why would you argue that investors should put their attention to deep tech instead of, let's say, what we usually like, better AI or some, let's say, faster-paced startups?
Well, I'd say that distraction proof is always great for everybody. So if you can see that, there are customers or revenue and the company is growing, we all appreciate that. Then sometimes it's good. I mean, like for people who invest in our fund, they look for diversity. They look for something else in addition to maybe that type of fast growth of opportunities. So most of our investors have a diverse investment base of various venture funds. But I think the value that our investments create is exit probability during the whole life cycle of the company. So most of our companies have multiple points in the company's life where there is acquisition opportunities for them. Now, I'd say that AI is of course changing that. So what really creates technical differentiation or moat, that's becoming different, at least from what it was before. And just being able to build software is less of a differentiator than it was, but there are different differentiators. So it can be data, or it can be particular knowledge of a certain way a certain business system works. So there are still these kind of defensible solutions. So I just say that sometimes, for diversification, different is good, and then when there is this strong technology differentiation, it offers the exit opportunities all the time during the company's life cycle.
Do you know on top of your head, maybe, let's say, the math behind the probability for the exit when you compare, let's say, deep tech and the other industries? Is there X amount of times bigger probability of finding an exit route or not?
Yeah, I've seen some charts. Let me see if I can share them to you afterwards, but it's more like this, that the exit probability is there at more points in time, and that can yield then to a higher exit probability overall.
Okay. You also mentioned briefly that you had done some angel checks before. Then the question would be, let's say, if you weren't running a fund, a 100 million fund, but investing your own money, where would you be putting your personal attention to now?
You probably know better, but I'd say that in this phase of angel investments, of course, diversification is really important. So finding a way that you can invest in a number of companies is important. So choosing a few is too few. So at least there used to be a rule of about 30 would be good. So depending on how much you are investing, diversifying it over 30 opportunities could be a good idea. Then the opportunities I've invested in, or I think that as an angel investor, you are investing your own money. So you don't need to convince others. You just need to be convinced yourself. And what can convince you? The relevant things are, what do you know about? So investing in a business area that you are kind of an expert in and you think you can spot something that others don't. The other, of course, is like the people who are running the business. So if you can become like convinced of the founders running the business, that creates an opportunity. And I think this creates a kind of a special opportunity for angel investors because especially if you are like on the front line and you can meet the entrepreneurs, you know, good entrepreneurs come from every city and every town. So wherever you are, you can try to spot the ones that you don't need backing and you should back. But that's really like a personal call. So
Actually, I want to pick a bone with something you said. You started the answer saying that diversification is very important, but you also said that something that the angels can, let's say, focus on is that to invest in something where they are experts in. So that's kind of, I know, putting, let's say, all your eggs in one basket. If you're an expert in, I know, X industry, you're probably, most of your bets will be there. Or do you, let's say, believe more, let's say, in this kind of generalist type of approach? Let's say the founder comes first. If I like his energy and if I know the insight of the industry or the product is there, then go for it. Or let's say, where do you lean?
it's a good question. I think from an angel point of view, I think it's easier to take the risks in the areas that you know. And in the others, it's more a question of maybe like then capital allocation. So if you want to be part of syndicates, it's a choice to play that type of like syndicate pool approach. And that the motivation for that can be about like wanting to back like a local startup ecosystem and of course, it has like return potential. So I agree with you that it's probably for most of us, there wouldn't be enough like deal flow in the area that we know that would allow for good diversification. So finding the way to like play with others can be like a good way for that.
Okay. All right. That makes sense. But all right. Let's switch up to something different. You said that in most cases, when karma comes in, usually there's already angels there. And we also briefly spoke about how an angel could be investing, what was the approach, etc. What do you actually want to see from angels being done to the startup, let's say in the earlier stage when they come to karma or to come to you? Let's say, what is the impact that you want to see from the angels?
We see like good things and we see bad things. So
say also the bad things.
So the bad things that we see in areas where, let's say in geographies where the angel setup is not so experienced, is that it's possible that the angel rounds have diluted the founders to a level that the company is like not interesting for VCs to invest in. So because the founder motivation from like capital gains is just like too small. So sometimes that happens. If the business was never supposed to be VC funded, then it's just like, so be it, that doesn't matter. But when we look at investments, we try to have this idea that every round should dilute the company about 20%. And every round should move the company forward by 18 months or 2 years. And if those rules are, if that like mechanism is roughly followed, then finding like many VC investors at least won't be a problem from that track point of view. What can often help us is that like when angels have invested, is that there's like some type of like more structure in the company. Doesn't need to be a board, but some type of reporting and follow-up systems are useful. Some type of accountability towards external parties, like because you have investors on board. There's not like must be in some way type of criteria, but certainly those help. And then if the founders and angels are kind of a good match in terms of like industry and know-how, they can of course be like invaluable like guidance and network support, for the cases where the angels really know the business where the company is.
Actually, some of the things that you mentioned, I think those are the things that actually the founders hate. That we ask them for monthly reporting, we ask them to put in the structure, but I guess those are the things that come with benefits later on.
Yeah, it's great if you take the hate first, then we don't need to. So.
All right, understood. All right, but when it comes to these, let's say, early bets, let's say from your perspective, let's say us angels, we're going into the early stage in. Let's imagine if it's a deep tech company, how much due diligence would you be expecting the angels to be making on the startup? Like how deep actually should we be getting into this? Because I mean, public wise, you see a lot of articles or podcasts or whatever that say to make these bets fast, to make them based on, I don't know, the team and the market and, I don't know, go with the flow. The others always speak about in more detail, understand the business, check for financials, getting deep in the Excels. What do you think about that?
It's your money, so it's your choice. So we invest mostly other people's money. We of course invest our own money as well, but we invest other people's money, and this puts like more requirements on this due diligence. So you need to verify more because we can't make like a mistake of like, I mean, we can of course make mistakes that we invest in a plan that doesn't realize. I mean, I think we've only made that type of investments, that the reality is always different than the plan, but the facts need to be right for when we invest. So, but of course, like when you are investing super early, it's really about the people. One thing that we do to verify is we mostly invest at the phase when the company has a product and the product has some customers. So what we do is that we want to talk to those customers. So if you invest only at the time that there is people, talk to people who have worked with these people. So at least like do the people due diligence. That are you investing in founders that know how to get things done and are like worth your trust and your money. So I'd say that at least like as much as you do for when hiring an important person for a key role, at least the same type of due diligence on the human level.
All right. I'll put in some question that we actually get asked online. And this is actually a very specific one, and I think it's up your lane. How do you evaluate the revenue timelines and key metrics for robotics companies that have, let's say, large total addressable markets, but let's say long deployment cycles and yeah, maybe it's such a startup as Starship that you have. You probably know about Starship, those little robots that carry your food from one place to the other. Any comments on that?
That Starship is actually a good example. So we followed them for a long time, and we've really been wondering that what is the right time of like enough evidence. We think the team is stellar, the technology is the best, they have the most driven kind of kilometers of self-driving like robots. But the question is that when does the business take off and so on. So here we were lucky to be able to join around at the time that we think that now it's happening. Still, like in that business, you need particular kind of regulatory support that that type of sidewalk, like drivable robot, is allowed, and it's not the case in every country. Currently, Finland is their kind of leading market. But like how to assess that timing on robotic startups, that when is the right time. So like we are not like so good that we could estimate from the technology availability or technology capability point of view the timing. We really need to look to the market. So we need to look at that when is there customers who are buying the product. So that's not an answer for angels. So it's a cheat thing that we can do versus when you need to choose.
All right, and getting back to the founder part, you said that one of the beautiful things of being an angel investor is that you can be all around the world, meet different entrepreneurs, the fantastic ones from all over the places, and you can, let's say, place your bets anywhere you like and meet these people. Is there, let's say, a single, I don't know, pattern or a signal that you see in founders that's like, I don't know, this is a go-go or this is a no-go in your case? I know, are there any, let's say, soft characteristics or let's say patterns that you have identified throughout these, I don't know, 10 years or so?
I'd say that the founders that make most sense to back are the ones who have like a great vision and they can attract people, so that they can attract the people who have the know-how that they don't. So attract them and hire them. Then, you know, and if the vision is like compelling and big, then you can create like really great companies. So I'd say that, you know, you are probably you are attracted to these founders as well as an investor.
All right. Also, another question from the online audience or someone in the room who wants to stay anonymous, but from your angel experience, how do you look at Excel financials knowing that it's mostly exaggerated numbers? And how do you actually kind of be serious about them as well?
It's a good question. Of course, it depends, like, is there any track to it? So is there anything that has already happened? So, you know, the past is not a guarantee of the future, but at least it grounds you. But when you are investing at the phase where there is no revenue yet, it's really hard to time that right and to know like how things work. Again, it comes down to really assessing the founder that you are choosing to back. Sorry, there's no like answer to that Excel. So that, but like let's say that even in our phase, like when we try to value the companies in Karma, we basically have the company forecasts. We then kind of create our own more realistic estimate, which is always less than the company. So if we feel like we need to make a better estimate than the company, then we think that it's probably not like we start to wonder that does this founder have the ambition that we want? So at least we kind of accept that the plans are more like best case and optimistic plans, or not even best case, but like good case and more optimistic than what reality will be, and then we discount them a bit. So yeah, maybe that's the way we do. I don't know if it yet works in that angel step. The question is that, like, do you know when the market starts when you invest, or do you know when the revenue starts when you invest? So if it doesn't start like tomorrow, or it hasn't started, how can you know that it will start when the estimate is there? So that's perhaps the question that we have found most difficult to answer. That's why we try to go at this phase when the product is in the hands of some customers and we can verify its value.
Okay, actually, I like what you mentioned about, let's say, based on your analysis, you provide a discount to the startup. What about cases where you have to kind of provide a premium to the startup's first offer? Because I feel like there are sometimes cases where the startup comes in asking for a certain amount of money, but you understand that, I mean, to reach those goals, you will definitely need more. So you kind of have to convince them that they need more, and you have to put on a higher valuation yourselves because you don't want to take too much equity away. What about these cases where you have to actually put a premium on them?
I think mostly we try to follow this idea that can you achieve with this funding round the goals that make it possible for you to raise the next funding round. And if the company is asking for 2 million and we think that they need 4, we'll try to, but you know, we are not as experts in how much they need than the companies, but sometimes you can read it maybe from the financials. So we would really then try to convince them to kind of try to do the bigger raise. And we also try to keep like the dilution at every step to this rule that I mentioned, that 20 to 25% dilution per round. So, and then it's a question that once we figure that out, do we think that the price is right versus the other opportunities that would be in a similar phase? So the comparison is more to like, what other things could you do? And then you try to make sure that for every company, the raise that they would do is right for getting them to the next step of being able to raise more.
Okay, very well said, very well said. We're talking about deep tech investors. At least for me, sometimes when I meet like deep tech only investors, they sometimes I wouldn't want to call them, let's say, crazy. Definitely some type of, let's say, illusionists or I know predictors of the future, because at least for me, sometimes it seems that some of the investments that are being made in deep tech are in, let's say, technologies or in products or services that, let's say, they don't have a market for it, or they, let's say, don't even have a customer base for it. So it's kind of something straight out of the future. So my question for it is like, you're doing these type of bets. Like, who would have thought that like these Starship robots would be delivering food from one place to another and driving autonomously? Is there like any specific books or I don't know shows that you watch so you kind of are so you are kind of predicting future on what could happen and how would people adapt certain things?
I don't think we are that clever. So we are more like, I would say that we are more like applied tech. So let's say at best, the companies that we back, there's maybe like a dozen teams like in the world who are building what they are building, and we try to pick like companies like that. So there are much more visionary investors than we are. So we try to still work in this realm of like what's happening today or in the next few years. So.
All right. I have only one question left. This is just a disclaimer to the audience that you can prepare your questions. But my last rounding up question would be, instead of asking you what are you most excited about, let's say, for our region or let's say for the Baltic in deep tech investment space or whatever, what are you most nervous about?
I'm personally most nervous about like AI in many ways. That it's like things are changing so fast that it's hard to know what the capabilities really will be, and therefore it's hard to know that what's like defensible at the moment. Then I'm worried about society not really understanding what AI can mean if there is like much less like jobs for humans. We built the whole society around the concept that we work, and work is important because you need the money, and with the money you buy stuff. So if that system stops to work, like how does this world work? So I'd say that just like, you know, this AI is changing things, and of course we are trying to like ride the wave in certain ways. So we just announced like participation or kind of co-leading a big investment round of $30 million in a company in the UK called MindGuard that is helping companies kind of bring up their cyber defenses to a level when they are starting to integrate AI into their corporate workflows. So if we think about this AI in the corporates, if we think about it as like well-meaning interns, it certainly creates like new vulnerabilities for those companies. That if you are putting in place AI, it's a bit like hiring like a lot of people so that you haven't had before, and maybe they speak kind of a different language, or they at least like think very differently from you. So new type of problems will be created. So they are backing like one company who's trying to kind of at the forefront like figure out what are those possible vulnerabilities. So I just say that it's a quite unknown and difficult to predict world in my opinion. So trying to be like really humble in that, and we try to also think that what could be resilient in terms of new investments in that area. It still doesn't answer this other worry that I have, that what happens to society if there's less work for humans.
Sounds like a sci-fi movie or sci-fi book. Yes. All right. I have no more questions, so now it's a chance for you to ask any questions openly to Tommi or to me if you would like to, but probably to Tommi. He's our guest. Any takers? Any founder questions, investor? Yes.
Do you miss the opportunity of day-to-day work in an energetic, innovative company? I understand that Karma Ventures is a really great fund, but once again, you are building a portfolio. But what about the opportunity missing the opportunity to build something new with your own hands?
Yeah, thanks. That's a good question. So I think sometimes you do, of course. So let's just say that this VC investment job, it's a backseat job, and you need to know that you are in the backseat. So you are not at the wheel, and you don't even necessarily have the map. you might have an idea that, that going west might be better than going east, but still somebody else is driving, and then oftentimes there's a bunch of other VCs in the backseat as well, and they might have different opinions. So you need to kind of figure out that how do you really guide the company. The question was that do I miss this action, and I'd say that yes, but it's also like a very different type of thing. So I've been lucky enough to have been doing that type of work for like 23 years of my career, and now I've been doing this investment thing for 10. So there's still some years left. So let's see what that brings. But at the moment, like very committed to like supporting the founders that we have. So.
Yes.
Yeah, I guess very general question. Within those 10 years since you started at Karma, so what has changed the most since back then to today?
So what has changed the most in these 10 years that we've been running Karma? And I'd say that like the biggest change has been in the last like 3 years with this advent of this AI. So I'd say that when we started, we were perhaps riding this like wave of cloud software, if you like, and now there's this wave of AI software. So everything that used to be like wasn't even done in software or was done on premise, all of that moved to cloud over like, I don't know, a 15-year period. And now we are seeing this AI bringing more like human-like capabilities to software. And I think this is a bigger change. The first thing was necessary for AI to have like training data and APIs to access and for agents to be able to do stuff. And now we are seeing like what happens next. So one thing that it is creating is that many of the bigger corporates believe that they can build more of the things themselves. So they some of them, like at least theoretically, believe that this AI power can make them like in this choice of make or buy, choose this make option more. That let's make it. But then when I've talked to like people who are heading like software organizations in bigger corporates, and I ask them that what benefits is AI giving you, I often get the answer that we are still to see them, or like, yes, we've improved by 8% or something. So probably, you might need to rethink like things in a very different way to get really these benefits of the AI, that just automating the way you are doing today or increasing that a bit. I wonder, I mean, we'll see. So I'd say, just to simplify, I would just say that this AI is a bigger change than the cloud wave that we rode before.
Yes.
Why do you limit your investments to deep tech and software?
Why do we limit our investments to deep tech and software? It's an area where, originally it's an area where we had like seen some successes, like in this Skype founding engineers earlier portfolio. And we also, like in a way, this type of venture fund, it's an investment product. So when we propose to our investors that what we will do, they will ask, okay, how are you good in that? So this is an area where we thought that we can differentiate, and since we said that that's what we'll do, that's what we are doing. So it's like sticking to the existing strategy. Now, if we make exceptions, nobody will be able to, we won't be stopped. But if the exceptions kind of lead to like bad investments, then our LPs won't invest, or our investors won't invest in us the second time, because we are not doing what we said that we are doing. So in a way, it's what we think we know, and it's what we promise to do.
One last question. Yes.
What is the most promising deep tech startup now in the Baltics?
What's the most promising deep tech startup in the Baltics? I think the Starship.
Choose an earlier stage one. Starship has already proven themselves, I feel like.
I think it's still out there, but like, but for earlier stage, I don't yet know.
All right. Any other questions? This was a fast question, so we can afford one more. Yes.
For example, 10 years ago, I would have invested in your fund. What kind of rate of return would I expect compare with investing with S&P 500 ETF 10 years ago?
Great question. Great investor question.
That's a good question. Uh, Probably with the current rise of like AI, that if you had like a good ETF tracker, I'd say that you might have done better on the ETF. The investors who invest in us, like they typically allocate like about 1 to 5% of their assets to this type of asset class, and then they often diversify that, let's say with a similar rule, so hopefully to about 30 funds. So they look for something else here than the mainstream kind of stock market. So they look for a hedge for that. So that's perhaps like one answer. And then on our portfolio, we've exited 4. With those, we returned like a significant part of the money our investors have invested, and we still have about 10 of the better performing companies left. So, you know, let's see what the kind of outcome will be. It's we have our models and our assumptions, but you know the reality will tell. And I'd say that it will still take like 2, 3, 4 years before we know. So.
All right. If no more questions, then thank you very much. Round of applause.
Yeah, and thanks again for having me. If you want to connect with me on LinkedIn, you can find me easily, like Tommi at Karma, and you know, just mention that we were here together. So I remember. Thanks.